on the March meeting then?
Well, I think the Fed is completely lost in its Keynesian puzzle palace. It ignores the fact
completely lost?
It's lost. This is 86 months since they went to zero interest rates. You can't have 7 years of zero-cost money without creating huge distortions in the financial market. So what they've essentially done is created now another huge bubble, and they're about ready to be repudiated because the bubble's going to collapse at the very time that we're heading into the next recession. They didn't abolish the business cycle. We're long in the tooth. We're 7 years into this recovery.
But David,
the world economy is deflating and shrinking. You saw the export numbers from all over the world.
Okay.
And so therefore, they're going to end up with no dry powder, a market that's collapsing, and an economy that's sinking into recession. And the entire...
Where is it sinking into recession?
Well, look at all the numbers. Business sales are down 5% from their peak. Inventories relative to sales are at recession levels. CapEx orders are down 10% from a year and a half ago. Everywhere you look in the U.S. economy, there is weaknesses except for the phony numbers put out by the BLS. Now, if you believe those numbers, more power to you. More power to you, but they're not correct. We still have fewer jobs today, breadwinner jobs, full-time jobs. I'm not talking about these part-time, bartender and waiter jobs and so forth, but full-time jobs, less today than we had in December 2007. Where's the recovery? Real household incomes are still lower than they were before the crisis.
Okay.
Where's the recovery? So my point is... Yes.
David, if the Fed's got to resign, surely everyone on the ECB, Bank of Japan, Bank of England, Swiss National Bank, I mentioned all those because they're all meeting this week. They've got to follow Fed officials out the door then, is that right?
Well, I mean, you hit it right on the head. The world economy is being driven by a cabal of central banks who are wrecking the financial system and driving the whole world economy to a huge crisis. Look at the market today. I mean, it's crazy to be trading where it is, given the earnings collapse that's underway. We just finished 215. Earnings of the honest kind, GAAP, that you file with the SEC and you don't go to jail for, came in at $86.46 a share. That's down 18% from the peak. That means the market is trading at 22 times current earnings. That is crazy.
Fueled by stock buybacks, though, by the way.
Pardon?
Fueled by stock buybacks.
Stock buybacks, and
So if that keeps going, that's the dry powder there for the market.
Well, stock buybacks are not going to help the economy in the long run. They're simply strip mining the balance sheets of corporate America, pushing it back into the market as dividends and stock buybacks. Is temporarily driving up stocks, but real investment is actually lower today than it was.
So I knew you were going to come on and say that Armageddon's coming. But look, I want to show you a chart, though. Guys, can we bring up the financial conditions chart? Which says, David, that actually we are above the red line. Financial conditions are improving. Look at this. Since the bottom there in February of this year, it does leave room if the trend is your friend, it does leave room for the Fed then to raise rates.
Yeah, but we've had a dead cat bounce, and they've already.
No, but don't give me the but David, look at that chart.
No, I'm looking at it. It means nothing to me because that is very short term. It's a dead cat bounce. The cat is already buried. The fact that high yield spreads have come in a little bit is not very meaningful, given what's going on in the oil patch. There is still massive default losses going to happen. Look at the high yield market performance and default rates. They're going up. Look at subprime auto loans. They're now at a delinquency rate higher than anything in the last 10 years. So you can go on, and the markets trade in weeks and days based purely on sentiment and purely on momentum. But the little bounce that we've had since February 11th, I think, is meaningless.
David, at least the Fed hasn't instigated negative interest rates. Do you think we're heading in that direction one day?
Well, I think they're out of dry powder if they don't go to negative interest rates. On the other hand, if they even talk about it seriously publicly, I think they're inviting a political firestorm in the United States. Finally, the millions of retirees who've been savaged by this and savers will take up arms, and they have a champion. I wouldn't be surprised to see Donald Trump take up that issue the minute the Fed even begins to utter negative interest rates. After all, what are negative interest rates? They're confiscation of your savings. Why would not there be a political reaction to negative interest rates?